Well, good afternoon, investors, and welcome to our January 21st frigid session of Bull Sessions. My name is Mark Robertson. I am joined here by my brand new furnace-toting colleague, Ken Kabula. Good
My
afternoon, Ken.
your rewarmed colleague, Mark. Okay, it got down to the upper 40s in our house last night, so we stayed at a motel. We didn't try to sleep here, but we did stay at the motel. So, but we're nice and toasty again with a brand new furnace. So we're feeling real good about the whole thing.
All right, and today we're joined by a couple of very special guests. The image on your screen, by the way, is from a movie uh, entitled The Wolf of Wall Street. And during that movie, there's actually a pep talk speech given by Leonardo DiCaprio in the presence of Steve Madden's shoes. And somehow this was the inspiration for a couple of our colleagues from the heart of Illinois to join us for anything and everything you would ever want to know about shoes here. And that's what we're going to cover here today. I welcome Dave Roberts. Dave is a volunteer for the Heart of Illinois chapter. I believe you're president of the Model Club. Is that correct, Dave?
That is correct.
So the Model Club in the heart of Illinois, and a retired chemistry professor. So everybody behave yourselves and do your homework out there.
Why
And
don't
then
you differentiate the two pictures for us, Mark? Which one's Dave and which one's Steve up there in the corner?
Dave is the one highest on the image with the perspective right behind Leo.
Okay.
And then we're also
And I'm
joined
the
by
good-looking one.
and the voice you just heard was Steve Emmerich. He's the president of the Heart of Illinois chapter. Welcome, Steve. You are good looking and you're tall.
I think this is going to be a crock of a bull session. That's all I can say.
Excellent. We're also joined here by Matt Spielman. I think he's come in from shoveling snow in Houston. Doing okay, Matt?
Yeah, we're fine. 1 week of winter, you can get by it. We'll be at 60 degrees by Saturday again. Back to regular programming.
Yeah, I can't imagine that snow will last long on the ground down there. So yeah, teach them what they need to know about handling it, Matt. It's not much to get excited about. All right, so we're going to talk a little bit about momentum. We're going to just close out that subject, and then we're going to talk about shoes. And I was advised that you can't talk about shoes without accessories, so we'll cover that subject as we come to it. All right, here's our weekly stop at Portillo's, and the reminder that Portillo's is not a sponsor of this session, but they should be. And just a moment of tribute to a giant. We lost Bob Uecker last week. He's the gentleman on the left up there, the voice of the Major League and Cleveland Indians in that
Mark,
movie.
I don't know what's wrong, but I'm not hearing you. Can you hear me?
Oh, did
I
I?
hear you both.
You can hear? Uh-oh.
I can hear you, Mark.
Maybe Ken's got lumpy internet. Not good.
Just a little
Are
outside.
you okay now, Ken?
Testing.
Ken.
1, 2, 3.
Ken.
Testing.
We can hear you, Ken.
Testing.
I'll chat with him.
Okay. Thanks, Matt. Well, this is his cue. I mean, he's the Cleveland Indians guy, but Mr. Uecker is renowned for the light beer commercials and a number of things, and he will be sorely missed. So,
Permanently on the front row.
yep. All right, here's our standard disclaimer. No investment recommendation is intended. This is entirely about education, demonstration of an interpretation of a method of investing that is nearly 8 decades in the making. Many of the people here, in fact, almost everybody here is a member of the Better Investing community, many affiliated with investment clubs, and we're here to talk about how we find opportunities, how we analyze those opportunities, and how we put them to work in successful portfolios. You are reminded, however, that you need to do all your own homework and make your own investment decision about anything that comes along. If we own something that we're talking about, we'll try to remember to disclose that. And if you'd have any questions or follow-ups for topics like we were just talking about, AI and transcripts and that type of stuff, please send that to our email addresses down at the bottom of the page, or if you'd simply just want to follow up with a question or would like copies of the slides. Ken, do we have you back yet?
I appear to be back. I have no idea what happened, but I can hear you now. Can you hear me?
We can. So I think we're all
Great.
set.
Okay, let's
I,
keep going. Yeah.
I don't know if you wanted to take a moment, just not in the direction of the Cleveland Indians, but Major League was quite a movie, quite a baseball movie.
It certainly was. I've watched it with my grandkids a number of times.
All right, we'll start off with, again, we're down to the last approximately 10 days of this Groundhog Challenge. Jim Gallagher continuing in the lead, but his lead has significantly gotten smaller. I don't know that anybody can catch him, but Keith Tubbs is sure making an effort. Keith is now above 2 million also, and that's as close as anybody's been in quite some time. And again, the average participant is checking in around 20%. We were talking before the session about 40% of our participants are beating the Wilshire 5000 over the last year, which is pretty cool. And
I think maybe we should consider giving a star to anybody over 100%, Mark. You know that?
hey, I'll take any star I can get. And you can see our relative positions on there. Kim has slid down to 61st, but she's waiting for that big mega announcement from Ardelic. So am I. And Dave Roberts is actually selling Groundhog recommendations on the side, so you can contact Dave. He's checking in at 33 this week, and he's been up in the near the top 20 pretty much all along the way. And Steve, you might want to get check in with
Just never
Steve.
mind. Never mind.
Well, I just say you're foundational, Steve.
No respect. No respect.
All right, Ken, any thoughts on that? That's pretty close to a record number of clubs showing up in the top 44.
Well, I asked Mark before the session started how many of the Groundhogs were beating the Wilshire, beating that 22.4 number from the Wilshire 5000, and he indicated he thought it was somewhere around 80, and we'll have that data for you next week. But that's a huge number to be beating the index, and I'm very, very pleased. Mark relayed before we started that in a normal contest year, we're looking at 35, 40, 45 people beat the index. So to have a number that high means that our people are getting much better at deciding what kind of stocks go into a contest like this. It's kind of a specific skill, but still, it's a good one.
And take note that there's only one celebrity in the top 44, Tom Gardner, and he basically thinks like we do. So that's really kind of cool.
And I got to shout out, Mark, to Don Sheets. Don's in my investment club, and he always takes any chance he can get to tell me that he's in the top 40, and I'm not. Okay, so
that'll be 5 yards for taunting. All right. All right, here's just a real quick summary of the Groundhog Challenge. One Groundhog Challenge ends and another one begins at the same time. And we've been doing it for 18 years. We'll do it for a 19th, and it's just a lot of fun, and we'll be going into a summary of that here in a couple weeks. But there's just some real nice sayings on there. I love Hugh McManus's that patience is genius in disguise. And also this notion of we do believe that simpler is better, Occam's razor. That concept is very much true. And of course, up, straight, and parallel selections do help us to sleep at night. So any other thoughts here, Ken?
Well, but I think the rules are going out of their way to be simple and easily understood, and it makes it easy on the judges. I know from running contests myself for many, many years that you want to keep the judge's job fairly simple.
It is fairly simple. We do have it automated that produces that spreadsheet you saw 2 slides ago. But here are the rules. You select between 5 and 20 investments. We will divide them up evenly. And you can't make any changes between Groundhog Day and Groundhog Day. And you can see there that you can submit them if you want to do them in private by emailing them to me or posting them in the Groundhog Challenge outperform Boulder. A lot of people seem to like to do that also. Either way, I catch them in both places. We did put a penny stock limitation of $1 on it. And just a reminder that dividends are counted in the final results. All right. Anything else there that needs clarification, Ken?
Well, I think it's nice that you're going to give a special consideration to clubs that might be meeting later in the month on February and might want to join the fun. And I urge you to get your investment club involved. It's even better if you can get the club to put in an entry and then to get 4 or 5 of the members to do the same thing. Mark's going to take an investment club entry on any day during the month of February, so they can even get one in late and still participate. So that prices will be as of when they submit it, Mark, or when they will it be the same as the other entries?
We generally have just taken them back to February 2nd, thinking that it
Sounds good.
in most years that's good for a 1 or 2% difference in either direction.
Yep, sounds good.
And, the judge's decision is final. The commissioner gets to do whatever he wants. Sometimes we'll return them to that date. Other years we've adjusted the balance for any change in the market. But we do encourage that. All right, a quick look at the market. It has been a good few days here lately. The bulls have been roaring back over the past couple of days, according to either Seeking Alpha or the Wall Street Journal. I don't remember which, but the farthest bar on the right, representing the total stock market, as measured by the value line arithmetic average, is back at that long-term trend line. And I'm in agreement with Peter Lynch. It's a pretty good idea to stay pretty much fully invested at all times. It's okay to have a little bit of cash on the side, but timing the market can really lead to some headaches and sleepless nights, in my opinion. Any other thoughts here?
I love this graph, you know that, and there's that green line touching that line of expected anticipated earnings or anticipated return, I mean, and it's all is good,
Yep. Right now, the average stock checks in at about 9% as you do a study. That's the average stock. All right. Quick look at, again, our 10 most widely followed stocks are the ones that show up here as single stocks. Might see a change here fairly soon. NVIDIA is number 11 and threatening to join the group. But as of right now, those are the top 10, along with Index Central there down in the lower third of the chart. And then we are going to talk a little bit more about the Seeking Alpha top 10. Ken yelled at me last week for it only including 3 years of information. Now I upped it to 5, and it's still a pretty interesting number. So we'll look at that. And our Buttonwood Bulls actually topped 10% annualized return since inception this morning. So that's always fun. We'll look forward to seeing that climb up the chart over time. And of course, the Tin Cup and Investing Roundtables are the 2 demonstrations we point to most frequently, long-term demonstrations of friends coming together, sharing ideas, and in the case of the roundtable, knocking it out of the park, investing with your friends. All right, so here this is, Ken. I went back and grabbed a couple more years. It's still pretty impressive. Keep in mind that 2022 result is versus a minus 20 in the general stock market. And I find it fascinating that GameStop was chosen in the 2021 list because we all know what happened there.
I'm just chuckling at that. Okay.
Hey, they went on to make a movie about it. So,
Yeah, I know.
So,
I just can't put it in the same sentence with the word investing. That's all.
Oh, okay. It is interesting that it is the most, it's got the most negative analyst sentiment against it right now. Strong sell. I know some people that would strongly disagree with that. Here's the actual stuff that came from a chat GPT AI, just an answer to a question. It's really some pretty diverse companies there on the left.
Isn't Gazprom Russian gas? Isn't that what that is?
I believe it is,
Yeah, I'm pretty sure it is too.
three
So,
or 4 years ago. I don't think the company is still publicly traded. Pretty sure it's not, at least not for now. So very, very diverse, but some fairly compelling results, at least from where I sit. Good stuff. Okay, so I just thought I'd take us through a quick reminder. The reason here are the top 10 stocks that were picked by Seeking Alpha, the Stephen Kress, for this year. And again, as we emphasized last week, there's a pretty heavy emphasis on this concept of momentum. So we went on a quest to try to understand it a little bit better. I think we might also talk a little bit about that EPS revision grade, not today, but maybe in the future. If EPS revisions are up in the right direction, that just means that your trends on your stock studies are actually being bent upwards. So that also is an interesting concept. This is how they're doing so far. If this were a Groundhog portfolio, which it will be, we'll reset the prices on Groundhog Day, but pretty well out of the gate here for the last few days. All right. And this is the actual summary we went through last week, and I just put it here just to reinforce what we talked about. Again, just taking that question up at the top, a very broad question, and exploring some of the elements. And the ones with the blue arrows are available in our database very easily. And one of the things that we've always been cautioned about is don't rely on something like a relative strength index in isolation. You want to compare it to something else. I think the rate of change, basically showing that the stock price has begun a recovery or perhaps reflecting or bouncing off of a bottom, is probably not a bad thing to think about conceptually. So that's part of it. And then Ken, we're going to go and do some Ishimoku
well, I'm going
research
to
in all your
surprise you,
holdings.
Mark, by telling you that I actually did some research on
Oh,
Ichimoku cloud momentum.
what'd you find?
Well, what I found out is that, first of all, you can't get a simple read on an Ichimoku cloud momentum because
I'm
it's not
stunned.
a number, it's a picture. And the picture is formed by, depending on how you define them, 6 to 8 different quantities, different types of averages, different types of price movement. And you put them all together and you form this picture. And then where you are at the particular time in relation to the cloud part of the picture determines whether you're in a buying situation or a holding situation or a selling situation. Now, there's plenty of people that would like to take my money and allow me to draw these pictures, and it's not cheap. They're not giving it to me for $10 a month. So I didn't go any further than that, but I did get a pretty good listing of the, and again, it's 6 to 8, depending on how you want to combine them or not combine them, of the characteristics that you look for. And I'll be honest, I don't understand 5 of them. So I'm not going to take any more of my time to go any further on it, but you can get some pretty interesting information if you use your AI engine and just ask it to explain in simple language the Ichimoku cloud momentum indicators. And you get an understanding of what they are, what their name is in Japanese, but you don't get a real feel for what each one of the things is actually measuring. I did ask it to draw me a diagram, and it couldn't do that. My particular chat engine couldn't draw me a diagram for Microsoft. So I'm going to play around with a couple of other engines and see if I can get a picture. And if I can, I'll stick it on a slide and send it to you, and we can show it to people. My feeling, however, is that it's not a tool that we're going to want to use very often, Mark.
Well, you've actually now encouraged me or nudged me into taking a closer look. It is available at stockcharts.com, And I will take a closer look just
Well,
for
it's
kicks. I
available
mean,
in the paid subscription, Mark, I think.
oh, it's not in. Okay, it's not in the
I don't
public one.
think that I can get it for free. At least
Okay.
I was pretty sure I couldn't get it for free. And my audience will be certain to correct me if I'm wrong. So
Well, we'll take a look. I just thought that we could probably sell that as modern art. Anyhow, long-term investors are encouraged to combine indicators as they try to make a decision like this. So, in summary, what I did is I went back and took and built a three-component momentum, call it an index if you want, or however you want to think of it, where we're basically taking a look at the relative strength index on a relative basis in combination with two momentum indicators, one being a 12-day short term, again, to deflect that bounce off the bottom perhaps a little bit. And then the other momentum factor, which is very heavily relied on here, that momentum grade is very much heavily weighted towards a 52-week or a 365-day total return on the companies. So taking those three and slapping them together, I think you do end up with something a tiny bit interesting that we'll want to at least scratch our heads over going forward. That leads me to this. Our friend Ralph Acampora, and many of you know Ralph. You've seen him at national conventions and the like, but this is one of those moments during a lifetime of investing that I just cannot let go of and I can't forget. It actually came back during the 9/11 moment in time, and Ralph was talking about the condition of the stock market, which was actually shut down at the time. And he shared this basic story. And he talked about how at the turn of the century, again, right around 9/11, that he was concerned that the number of investors just blindly investing in the S&P 500 index fund were, in his words, about to get killed. And he didn't mix any words. And sure enough, something that Ken has pointed out to all of us a number of times, that lost decade or flat decade, whatever you want to call it, for the S&P 500 was not bolstering for a whole lot of people. I'm sugarcoating. And it was really pretty cool. But then he went on to say, you guys are going to be okay. Again, he's speaking to an audience of probably 800 or 1,000 people listening to him say this. And the reason he said you're going to be okay is for precisely what we know and do on a very regular basis. And that is buy small, medium, and large companies. And I thought that was a pretty cool way to characterize it and capture it. I mean, that could be us with Ralph in the hospitality suite right there on your screen. And pretty good time. Very, very interesting and chilling comment at the time, which came true for a lot of people. And so I just take you forward a few years later. This is probably us again with him in the hospitality suite, and this is how he sees us, this community of investors. And that's where I think maybe this momentum thing makes some sense to me, at least so far. Make sure everything else is okay, and then make sure that at least the stock price is heading in the right direction, and then he's okay with it. So again, we're not technical analysts by any means, and he's certainly not. He's probably more technical than fundamental, but kind of interesting perspective on several different key things. So last slide on the subject for now. I said, okay, I'd like to see a listing of companies that have decent return forecasts and excellent quality rankings. And I only want the top 10%, so they've got to be above 90. And then I said, okay, now I want the ones that just have this relative momentum concept. I like the list. In fact, Steve Emmerich, we might want to talk about Lantheus at the Breakfast Club tomorrow. That's a company that makes solutions and products for MRI guys.
I like it.
So, and it shows
Mark,
up at the top of the list. Yes, Ken.
don't we have cactus on our small company list?
We do. There's a number of companies on here that have shown up in a number of different areas.
Right, and we've talked a number of times about Taiwan Semi and about a green brick. So I like this list also because it overlaps a lot of the screening that I do without using momentum at all. So if momentum can aim me at stocks like that and then give me some ideas past that, I think it might be a tool that we could use occasionally.
Sure, and it comes back to what I speculated and just an instinct last week with, what if nothing else, it were a tiebreaker. I don't know about you, but I don't like to buy a stock like, let's say, Schlumberger or whatever, and it has a bright future over the next 3 to 5 years, but it languishes for a year. That can be very unsettling. Again, it's not end of the world type of thing, but again, think of this slide as, what if this were the best of two worlds colliding here? So we'll see. It's an interesting concept, and I'll continue to refine it, perhaps make it available as a screening criteria so that we can tinker. All right. Anything else, Ken?
Well, I'm kind of thinking of a reaction to what you just said, and I'm thinking to myself, this might be extremely helpful when I'm trying to decide on 4 or 5 companies that are maybe in that area of my portfolio I call alternative investing. It doesn't bother me so much when a good solid up straight and parallel growth company languishes for a little bit. I have a lot of patience, and I'm going to hold it for a long time. But in that alternative investing, I become impatient much quicker than I do when I'm buying up straight and parallel. And maybe this would help eliminate some of the need to be impatient with some of the friskier kinds of companies that you want to add to your portfolio occasionally.
Yeah, it's one of the great mysteries of investing. I think I talked about this last week. I have my core portfolios where I would definitely second what Ken just said. But when it comes to my Robin Hood, my hood, the more playful slash speculative, I wouldn't mind experiencing a little more of the one more performance shown on this slide. It's compelling to think about.
I'm going to change the subject for just a moment, Mark, and tell you that Bakul, one of the folks in our audience, and I knew that I would get information if I put it out there. Bakul indicates that I can get the conclusion and the graphic for the particular Japanese that we were talking about, the indicator that we were talking about.
Ishimoku.
And the Ishimoku, I couldn't come up with the name, all right? And we can get that at stock charts. So I'm looking to make sure that I'm referencing the right stock charts thing here. And if I'm wrong, I'll tell you in a couple minutes, okay?
All right, you're actually going to go and play, huh?
Just for a moment, yeah.
Okay. Well, let's go ahead and go on. This is where Dave and Steve come in at the Breakfast Club, which is hosted by the Heart of Illinois chapter on Wednesday mornings. There have been a couple of discussions erupting around the area of shoes. And I just want to say this is a life-changing experience for me. I had no idea that shoes were such a big part of one's life. I mean, I'm pretty much happy with that well-worn sneaker part right down the middle here, but apparently there's power and euphoria and memories embedded in the steps that you take and all that kind of stuff. So, Steve and Dave, I just want to thank you guys for making me a more complete person. Now, which are your favorite quotes among the 20?
I'm going with number 11. Sometimes the most expensive shoes are worth the investment. And I'll make a comment about that. Do not when you're researching shoes, do not do an inventory of your wife's closet. That's off limits, or should be.
Yeah, I discovered that as I took a couple pictures, and she apparently, although she's greatly enjoying a lot of the aspects on the left. Apparently she doesn't want people to know about the wide variety that she has. How about you, Dave? I mean,
I'd say not all shoes are created equal.
Okay. And that includes probably your favorite type of shoe.
That does include Crocs, yes. Crocs are like
On the
Crocs
left,
are a retirement shoe.
that's actually a picture shared by Dave of one of his areas in his house that's populated by a significant, I think that's a significant number of Crocs. Very impressive.
I have more in another place.
I just
I
had
know
to,
that's a good percentage of them.
You may not want to admit to that. That's just my opinion.
It's not a collection, it's an obsession, okay?
I think so. And you can see he's got little adornments on a couple of those, I think.
I do have gibbets all over the place, but you can also, they can match your shirt. They can match your shorts. They can, it just becomes a little more interesting.
Dave, I applaud your firsthand stock research. A good product is necessary, but not sufficient for a good company.
now I got to say to the audience, I was ready to discount this, but that is an actual picture from our vacation that is one of my 3 pairs of shoes on the left, the Skechers. But the other 3 belong to my grandsons, 10, 8, and 5. And they pretty much agree with Dave. So,
I think, Dave, when we talk about investing in Crocs, that's not quite what we had in mind. It's fine if I own the stock, which I don't. I'm a Skechers person. So, one thing on my research this morning, Crocs is ridiculous. They have support. They have Star Wars, Gundam Mobile Suit, all their college collection. So they have every major college, I think, in the United States. I don't know. Nickelodeon, Marvel, Harry Potter, SpongeBob, Barney, NASCAR, McDonald's, Minecraft. It just goes on and on. I quit writing them down. There were so many. NBA, the National Hockey League, Minecraft, Pixar. Oh my goodness. I was shocked to find all
I'm waiting for my Fortnite skin to have Crocs.
Yeah. I think
right now it just has a pair of Air Jordans, but I wish it had Crocs.
all right, so let's move on. We've kind of set the stage, and Steve, you can kind of walk us through this, but this is an interesting slide too. They're all approaching the market in a slightly different way, but they seem to be focusing an awful lot on vitality. But go ahead.
Well, there's not a lot of exciting things if you go into the third column from the right, and it says the Schwab equity rating. So currently, not very much excitement going on, but the Nike was one that I actually purchased some in. The value line financial strength was A+, and the manifest par was not too bad, 11 for a huge company. It's a huge company. Quality rating was 85 for manifest as well. And one of our people from Morningstar, Susan Drabinski, is that pronounced correctly?
Yeah, Jabinski.
Yeah, Drabinski. In December, that was one of her picks for 2025, I do believe, was Nike, that they thought it was undervalued. So that I like it. It pays a dividend, and it's probably the favorite one on my on this list. And by the way, this list is pretty darn short. I was also shocked at how many shoe manufacturers there are. I listed a bunch of them: Adidas, New Balance, Vans, Puma, Allbirds, Authentic. I can't remember that other one was Under Armour, Timberland. There's just so many so many that didn't make the list, and
Yes.
I don't think I'm going to dig any deeper.
Yep, and then some of them are swallowed up by others, and there's that Stephen Madden one from that opening slide. Dave, did you want to share any of the background information on some of these, perhaps to go a little deeper?
I mean, I could, in the sense of, I mean, I do like to look at what the company does, what they're selling to. Like, so On Holding, that On one, is a relatively new company. It's appealing to a lot of young athletic people, people who like to get outdoors, people who like to just get outside and do things. And so they have a Roger Federer shoe.
I think this is from On, the second
Yes.
picture. Yep.
Oh, okay, right. And so they have a big momentum right now in the younger crowd. Crocs are kind of all over the place in terms of young, old, your grandkids and me, and they're just all over the place. They had a big resurgence during the pandemic when everybody was home and just sitting around and just wanted a slip-on shoe. They make traveling easier too, as far as that goes.
Something surprised me about Birkenstock is that they just recently went public.
Yeah, like a year ago.
Yeah,
2023.
Yeah, 2023.
Been around since the 1700s.
Yeah. Yep.
So
Who knew?
they've been around forever.
Yep.
Yep.
Good stuff, and there's nothing that really leaps out incredibly exciting. And of course, Nike is about 30 or 40% of the market, so to speak, right now. So they're pretty major. Wolverine.
Well, Mark, there was the only other thing I'd say is that Michael Jordan's still earning money on Nike. I mean, what was the amount? It was 100-something million.
Well,
is that right?
He had a 1 year, $255 million.
Yeah, and that was like last year, either last year or the year before. I mean, so it's not like when he was playing basketball.
That's unreal.
He's still making that kind of money from his shoe.
Yeah.
I hope he lets us know when he's going to sell his shares of stock, because something bad's going to happen.
And he's only making 5%.
Yeah.
So Nike's doing well.
I just threw this one in there. Longtime community favorite, Wolverine. That's a Michigan company, and they're, at least around here, they're pretty famous for hush puppies. That's that's my 3B pair of shoes. But many people don't know that they are actually doing some branding with those companies down at the bottom also. Longtime community favorite.
I'm surprised at that list as well. I mean, they have a lot of different brands, I guess you'd call them. They're Bates and Caterpillar and Harley Davidson, Hush Puppies. So they've and one was Sweaty Betty. Who's ever heard of Sweaty Betty? I don't know.
Very true. All right, here's a look at the manifest output from our database on the companies from top to bottom. These are ranked from highest manifest rank, so highest return forecast in combination with quality, and kind of what you'd expect. Skechers is pretty well regarded in the community. Birkenstock's pretty high. Wyco is a mystery to many, but that is the Florsheim company. Crocs ends up pretty close to the top of the list. Deckers has been a favorite. Very highly regarded from top to bottom. So you can see Adidas basically hasn't been the same since they lost Michael Jordan, or did not get Michael Jordan. So they continue to fade. But from top to bottom, there's a few numbers there that are fairly compelling, I would think. So let's go ahead and take a look at a couple other things. This is just a quick look at the shoe industry in general. And the point that probably should be made is that shoes do wear out, although my wife is pretty well convinced that I'm unaware of that. But they do wear out and need to be replaced. So this is a recurring thing, and cranking away at 7 or 8% per year, and that's pretty safe. And then just out of curiosity, I said, what if you take the Nike out of the graph on top? How does the rest of the industry seem to behave? And it's virtually the same, somewhere in the high single digits for growth, and The two shapes are pretty similar in general. And then there's this slide. I think this is actually the key slide about talking about any of these companies, whether you're talking about Deckers or Skechers or On. This is a look at the profitability characteristics and the overall industries. That you can see the COVID bump there. You can see when everybody was willing to pay more for Crocs in 2021. But you see just a generally increasing trend. And if you're investing in a company that's exhibiting a decreasing trend in either of these characteristics, you might want to think twice or maybe 3 times about it. So I think it's an important slide to put your company up against as you consider it. So Steve, would you like to walk us through, how you view these companies with the stock comparison guide and, what type of decision you might come to in a club setting?
No.
Okay.
Well, I kind of threw this together pretty quickly, and most of these companies are what you'd expect. And the Decker and Skechers, Crocs, Nike, all four of those kind of what you expect. And then Birkenstock, being that it's such a new company, it had ridiculous earnings per share growth for the 10 years, which there isn't 10 years. There's only a couple years. So we kind of took those as outliers. But I think that it's surprising to me that there are this many profitable shoe people. There's so much competition out there. It's kind of amazing. But I was pretty happy with the Nikes of the world. I don't think they quite stand up to some of the smaller, the Crocs and Decker and Skechers. But I think overall, I was pretty happy with what theirs were. And you can see that there's a couple invalids in there. I didn't get my judgments correct, so I had an invalid there on Deckers. So, but I have a feeling that Dave can speak more about Deckers because he's been following Deckers for a long, long time. So
I lose sleep over Deckers. That one just drives me nuts. How it just keeps going up. And I actually do think it's a buy right now, but I'm not, because they just split not too long ago. They just 6-for-1 split sometime in the last year.
Yeah, they're certainly in fairly decent shape with middle of the range prove anyhow. Ken, you had mentioned to me that one of your investment clubs had done a
I'd like to speak just a little bit to the stock comparison guide. I would think that if you're going to use the stock comparison guide, you might try the one that's attached to the core tool rather than the one that's attached to the SSG Plus tool. The core tool pares it down, kind of focuses you on what is really important on this long list right here, and doesn't look nearly as intimidating as this particular one does. And then the other thing I want to really stress is that if you're going to use this tool, you have to have SSGs that are all of the same, and in our clubs we call it the same flavor. What that means is that you can't have one person do an SSG that is extremely aggressive and then compare it to another company where the person that did the SSG is coming out very conservatively in their judgments. You have to have roughly the same flavor, and what helps to do that is either to pull everybody together when you're doing the SSGs and, kind of draw out everybody else's judgments, or have a single person kind of come up with a judgment that is pretty data driven by some of your more trusted sources and not taking into account whether you feel aggressive or conservative in the whole scheme of things. We have a club that just finished a study of the shoe industry in September 24. We narrowed it down to some of the same companies that Heart of Illinois narrowed it down to. We did Crocs, Deckers, Skechers, and then we did On, which we felt was the fourth best. We did not include Nike in our study. We just didn't feel that it had the growth characteristics we were looking for. And we only studied 4. When we took our final vote, usually our final vote is pretty cut and dry. We did feel, however, that Crocs and Deckers were equally attractive at the time we did the study. We ended up buying some Crocs and putting it in our portfolio. So I happen to be on the Deckers side of that coin. I liked Deckers better than Crocs, but a slight majority of the club liked Crocs better than Deckers, and that's what went in there. But it's interesting that 2 of the model clubs in 2 different geographies are studying the same industry. We thought that there were pretty good opportunities for stocks that were in the buy zone. Now, this again was back in September. I haven't looked at these stocks carefully in the last couple of months, but I'm thinking that Crocs at least, excuse me, I'm thinking that Crocs at least is probably still in the buy zone, and Deckers might still be as well.
Well, what I'm thinking is that Dave Roberts can expect to receive a Christmas card from the B.I. Baker Investment Clubs signed by everybody, because Dave is obviously holding up the Crocs. Demand. I'll just say demand.
We had a lot of demand for it with people that belong to the B.I. Baker Club as well. We did have quite a discussion, Dave, about the other brand that Crocs recently brought into its stable and is having a huge difficulty with, and that's the Hey Dude brand. And that's losing them a lot of cash right now. It's not doing very well at all, and they're insisting on sticking with it. They think they're going to be able to turn it around. We'll have to give it another year or 2 and see if that's going to be able to be workable or not.
Yeah, they've been struggling with that since 2021, I think.
Right, it's been a long struggle,
Which is where Deckers, for me, Deckers is a little bit stronger because of that. But Crocs is, they claim they're going to turn it around. And so.
Yeah, I think that the final decision on Crocs and Deckers in our club, at least, came down to the par values of the 2 and compared to the proved values, which were very close to the par values for both of them. That couldn't break the tie. So I think par probably ended up breaking the tie when it was all said and done.
I like your circle of the relative momentum there for on holding, and I was kind of surprised at Wolverine, because Wolverine has really fallen out of popularity. There was only one study in the sentiment, under the sentiment tab in SOG Plus, and that was my study. So I was kind of surprised. So we'll kind of see where that goes. And on that previous slide, also there were we looked at 5 different companies on the stock comparison guide, and 4 out of the 5 are medium-sized companies, which we like to load up on.
Yeah, I'm just circling things that I find interesting. On holding with the highest momentum score, the highest expectation for annual increase in sales, which can be a bit of a tailwind. I think on is probably on amongst my Groundhog candidates based on some of this homework. I do find it fascinating that the analyst consensus, they must hate hush puppies. I don't get that one.
Well, I think, Mark, that the quality ratings, and we rely on the quality ratings, it's an important number for us. And the last 5 companies, along with Rocky, there probably were tossed out almost immediately from the study just based on the quality ratings.
Yeah, and
you have all of them under 25,
Yeah, look at their sales forecasts on the right also. It's not, and that is just a 1-year thing, but it's not just a 1-year thing.
Yeah.
Interesting stuff. Well, thank you, gentlemen. I I learned more about shoes than I care to admit here today. Good stuff. And of course, there he is. I think Dave was talking about the movie. What's the actual movie that describes the negotiation? Dave, it's
I think it's
recommended
called Air.
viewing. Air.
Yeah, I think it's just called Air.
Is it on Netflix yet?
You know, I don't know what it's on right now. I don't know what it's streaming on. It is on. I did stream it, but I don't remember where.
Okay.
We're getting a comment from our audience. Kevin from the DC area, Kevin Galogli from the DC area, is telling us that according to Front Office Sports, Jordan received $256 million from his latest deal, and that deal was just for 2022.
Yeah.
Oh, wow.
I mean, Nike makes billions. They make billions still on Air Jordans.
Yep.
Yeah, but
That's just
Jordan got $250 million out of it, so that's not bad.
not bad. And I keep trying to get my family to buy his house for me in Chicago, and it was on the market for 12 years. Kevin Galogli, you're welcome to do the same. Good stuff. All right, so let's go ahead and move on. Thank you, gentlemen, for the running around in Crocs and Skechers and Deckers. Good stuff. All right, here's the question that we have not answered in the last couple of weeks, even though we intended to. The question came from Cheryl. What was the projected return on value for Cognizant at the time that we gave this discussion what is now almost 5 years ago, Ken? And what I did is just went and grabbed some of the numbers that would be necessary to perform that calculation. They are on display on the right there. We were talking about a noticeable slowing of growth and profitability for the company at the time, a change in management at the time, and that is reflected in some of those numbers up there, and those are the numbers that we were using back then. So you can see that their total liabilities pretty much matched the cash in their wallets. So we're talking about a $35 billion market cap. So the formula for PROVE is that projected operating income divided by the enterprise value, which in this case is the market cap plus the total liabilities minus the cash in the wallet. And you end up with a projected return on value of around 11%. The par back at that time was 9 or 10%. So not end of the world, but it certainly was uncomfortable at the time, and it actually did proceed to get worse. I'm told that there are articles out now claiming that perhaps a renaissance or turnaround is somewhat expected.
Yeah, for those of you in the audience, Mark's referring to a Motley Fool article that appeared in the last week or so, just coming up with a whole different tone towards Cognizant than we have seen in the last 2 or 3 years. A very optimistic article about the future for Cognizant, and especially indicating that the article writer felt that 2025 was going to be an outstanding year for this company. This happened before we were even bull session, didn't it, Mark? It was still Turnout Tuesday at that point. Okay.
That's right. Pretty close to the time when we started, though.
Yep.
All right, so that's the answer to that question. Here's a quick look at the Buttonwood Bulls portfolio. No major news here other than the fact that we are covering close to a 10% return since inception. And we'll be back talking about that more in the future. Here's your weekly reminder that we do archive these sessions on YouTube under Manifest Investing. You can find bull session segments and the roundtables. And it is here, Ken, that I can formally drain the tub. We will not be tub gating again for several months with the Lions. The Lions
put your hat in your hand and put it over your heart. The Lions are no longer moving towards the Super Bowl. So that was a big blow to a lot of folks around here, I'll tell you.
I was really hoping to get more pruny, but it's not going to happen. Not this year, so wait till next year.
Now, I'll say it very quietly that I was a very happy person after the Monday football game, after yesterday's football game, however. Go Bucks, and that's all I'll say.
Yeah, another national championship for Ohio State. Good stuff. All right, we will be coming back to these themes in the near future, so we'll keep them on the back burner, and we'll close just with an acknowledgement that there is inaugural things happening in Washington, D.C. yesterday, probably still some today, and then a couple images of shoes. I figured, Dave, you should have that shoe. It's monogrammed just for you.
I kind of like that shoe.
And the one on the right, I actually was wearing it at tennis, and one of my tennis friends said, "You know, Mark, that shoe owes you nothing." So, in other
Money
words,
well spent on those shoes for
full.
sure.
I extracted the full economic value out of that shoe.
Gotta go back to
before
Kmart
retiring
and
it.
get a new one, Mark, you know?
Anyhow, thanks again, gentlemen, for the shoe
would-
dissertation. Go ahead,
I
Steve.
want to add one more thing. The other night, Ticker Talk was outstanding. Ken's portion of it was outstanding as always, but it made us take a look at our portfolio last night as the Model Club met. So we appreciate what you've done and always do, Ken.
Well, thank you. I appreciate that kind word.
So with that, anything else in the hopper, Ken, or we leave Matt to shovel his snow, or actually snicker at his neighbors?
Mr. Galogli is throwing shade at the Ohio State Buckeyes. So on that note, we will have to close it down and say goodbye to everybody.
Don't we have an eject button for people like him?
I don't know, but I didn't see Maryland in the playoffs anywhere. So
yeah. Or Drake, whatever that is. All right, good stuff. Everybody take care. Send us get out there and do your Groundhog shopping. If you get any spectacular opportunities, let me know about them privately.
What, so you can add them to your portfolio, Mark?
And get out there and hunt, and we'll be back a week from today. Take care, everybody.
Good afternoon, everybody. Bye-bye.